Let's talk about paying taxes. Up to now, we've talked about completing the tax return, but when it's all done, it calculates that you owe some money. What are your options if that's a difficult number for you to pay? Well, first of all, let me give you some advice that you should always be, as you make trades, setting aside money to pay your taxes as you go, and perhaps paying that as part of your estimated taxes. Estimated taxes should be paid on a quarterly basis as you earn the money throughout the year. It's a bit of an estimate, and the IRS, if they think you didn't pay them early enough, they can hit you with back interest, again at the interest rate, which is 8% per annum at this point. So if you owe a lot of money, you should pay some of it. Otherwise, you're going to be paying some interest, which may or may not be important to you. When you do your tax return, let's say you owe some money. Let's just say you owe $50,000 in taxes. What do? You can mail in a check right now with the tax return or give them your bank account information. They'll take it right out when they process your return. That's the nicest, but not always easy for people. So you can file the tax return without payment, and then within about a month and a half, they're going to send you a bill. And they're going to say, you owe this amount of money. And typically about a month or so after that, they're going to hit you with another bill saying, you need to pay this now. And about a month or so after that, they're going to say, you need to pay this now, otherwise we're going to do some, nasty stuff to you. It's a little more threatening. And if you don't do it then, a week later, then you're going to be hit with a notice where they're going to place a lien on your assets or seize your assets. And I know people who have had assets seized. Entire bank accounts emptied out by the IRS because they didn't pay their taxes. Well, you don't have to let it happen that way. All right, we can do this. There are different things you can do. First of all, I should add that when you don't pay your taxes by April 15th, you are subject to a penalty of 0.5% per month for the next 3 years that you've not paid that amount of money. And then they're also subject to interest on that amount, which is calculated daily, but currently it's running at about an 8% per annum tax rate. So these can add up pretty quickly. So you want to make sure you file. You definitely want to make sure you file your tax return by April 15th or by the extended date, which would be October 15th. Failure to do that is a 5% penalty on your taxes. So that adds up really big.